Hello, Connecticut residents. Today we're going to talk about qualifying for a mortgage as a self-employed or a 1099 worker, where it's really difficult for you to qualify using the income that you document on your tax returns. So there are solutions out there, and we're going to talk about it right now. I'll start with this. Just because you're self-employed or you're a 1099 worker, it does not mean that you cannot qualify for a conventional FHA or even a VA loan. The reason you may be watching this video is because you potentially have spoken to another lender and you do not show enough on your tax returns, or not just to buy a house, but show enough to qualify for the size mortgage that you need to buy the house that you want. And you've got the write-offs, or you've got losses, or you're just not documenting all of your income. You may be in a cash business, and there's just not enough there. Maybe you're a truck driver, 1099, and you've got a lot of fuel and other things that when you deduct all of that, you don't show enough. So what we're going to talk about are a couple of mortgage options for you that are outside of the traditional mortgages. And one of the creative programs that's out there that you may have heard about is the bank statement loan. And with this loan program, you will provide anywhere from 12 to 24 months worth of your bank statements. And your loan officer can take a quick look and try to figure out what income they could use off of those bank statements to put on your loan application. And what they're going to look at will be the average monthly deposits over the last 12 to 24 months. So let's say on average you deposit $10,000 a month. And you could have some months where you deposit a lot. You could have a couple of months where it's zero. Again, it's an average for 12 months. So let's say your deposits are $10,000 per month. They are going to use 50% or maybe 75% of that average as the gross monthly income on your loan application. So in the $10,000 example, gross monthly deposits, you'll be using anywhere from $5,000 to $7,500. The lender will, as your income on the loan application. So then from there, the rest of the mortgage gets underwritten the way any other mortgage would. It's just how do they arrive at your income, okay? So what other things you need to know about a program like this is that the down payment is not going to be extremely low, like 3.5%. Your down payment typically starts at 10% or more, depending on your credit scores. So the higher the credit, the lower the down payment. At the moment, we have an option for 3.5% down, but it's a different type of mortgage program. If you are interested in that, give us a call and we'll talk about it. And as this video ages, is there a chance that that program doesn't exist when you're watching this? But if you're interested, then definitely give a call. But your down payment, again, is based upon your credit scores. So the higher the credit, the lower the down payment. And there's going to be a point where your credit would be too low for a program like this. As you get below 550, for example, you're likely going to need to increase your credit scores before you qualify, regardless as to what your down payment is. Now, the other thing is the interest rates are typically higher for this type of a program. And you're going to be dealing with a situation where the lender's taking on risk because you're not providing all of your income documentation. So it's not going to be unreasonable, but it's not going to be the same rate that your brother, your cousin, your neighbor, or whoever just recently got for a conventional loan where they're W-2 wage earners and they're providing all of that in their tax returns. But again, it doesn't hurt to call and get a quote to see what you're looking at, to get pre-qualified so you know what your buying power is based on your deposits. You could also, with this program, get a co-signer that could bring additional income to your application, so that's not a problem. The same thing here applies for 1099. So if you're able to show your bank statements, then you can qualify for this program the very same way. Down payment assistance is not going to be offered by a lender, but if you have some down payment assistance program that you qualified for locally, then yeah, you could bring that and potentially use it, not in all cases, but potentially use it as part of your down payment to qualify for this type of a program. And at some point in the future, if you're showing a lot more income on your tax returns, you could always refinance into a conventional loan, for example. And you're not, these are 30-year fixed type mortgages, so you will have the benefit of a 30-year amortization. And the other interesting thing is about these programs is there's no PMI. So let's say you've got really good credit and you're going to put 10% down. Although your interest rate is higher, you're not going to have PMI. So if you're only putting 10% down on, let's say, conventional or FHA loan, you're going to have the MI or PMI added to your payment, and therefore the difference between your two payments, between the loan that you would get as self-employed and the loan the FHA or conventional loan with the MI and PMI, is going to be much closer. So you may think about that and not get so hung up on the rate and just look at, well, what are you paying each month? Because your PMI that's money being flushed down the toilet. None of that's going towards your principal either. So something else to consider. If you have not spoken to anyone about it, we'd love to help you with this. And there could also be another option for you on the table that does not even require bank statements. Ask about that. It would likely require a higher down payment though. And we'll talk to you about it when you contact us. If this video was helpful for you, please hit that like button for me. I do appreciate it. And just look for contact information in the first pinned comment of the video and also in the description. Hope you have a great day, everyone, and we'll see you in the next video.